Good morning, everybody. So since Bitcoin's dumping really hard over the weekend, we start breaking structure Sunday. I figured it's time to look at some higher time frame stuff and do a bit of a more robust market update so people can see what's going on and where we're expecting to go now. The big thing now, looking at some of the economic calendar data that's coming out, nothing really crazy until we start getting into Thursday, Friday. Expect Thursday and Friday to be pretty legitimately volatile. Pre-market, an hour before the market opens on Thursday, we have CPI data and initial jobless claims, and then also Friday we have PPI data. So big Thursday, Friday this week. And then next week, just so we're all aware, not a whole lot of crazy stuff going on, but we do have Good Friday next Friday. So we're going to see some market closings as well. Looking at Bitcoin specifically, like on the long shorts, we are aggressively getting back into the long side. This started happening over the weekend, and this has continued going into the Sunday dump, going to the Monday morning dump. So we bit way back over close to 70%. We're coming back down a little bit, people trying to catch a bounce and some potential shorts. So we'll see how far we go down here on this first little bounce, but we'll go through the levels in a second. The funding rates are not great. We're actually losing levels very aggressively, and this is what we talked about Thursday, Friday, that the token margin was up, so very positive funding rates across the board, not incentivizing major longs at all. The pressure is still from the exchanges to push price lower on top of all of the other macro market things that are pushing us lower, including tariffs. On the liquidation side, locally we're breaking into some really big stuff on the lower time frames as well as the higher. So if I now flip over to the 3 month outlook to see exactly where we're going, well, we're clearing the big stuff right now, and we've gone significantly lower than we expected in the first little move push lower. But this was happening as soon as we broke the level on Sunday. There was no stopping it once we closed below 80k, and then losing the lows from, what is it, the 10th of March. So that's where we are now. We're in a bit of a higher time frame. It looks like a volume dead zone, but that's only on the 3 months. Now we got to look at a very high time frame perspective, going all the way back to the end of last year, where we have significant liquidity down to between 70k and 60k. That sounds like a crazy place that we can't really get there, but we're taking out all of the major market liquidations right now. We're probably overdue for a bounce, but it's still a pretty ripe area below us if we're going to continue going lower. So that's on the liquidation side, looking at the liquidity. So this is just showing the liquidity as it comes in over the weekend. These are just showing areas of where there are resting limit orders. So we saw this coming in over on Friday, massive, push hundreds of millions of dollars above us from about 86k and higher to kind of force price lower. Those are still in place. We're coming back down now to plunge protection. So this is where we have major resting orders of longs to try and hold price by any means. So 15 million all the way down to like the high 60s, which is crazy to think that we're gonna get back there. But the liquidations are massive. We've seen also some people pulling orders in this area. So watch this. We're seeing some manipulation here locally to potentially continue the force. There's nothing attractive for a regain until we get back above 77. There's just not. We're making new lows, lower lows, and we're breaking down really hard. We do have a good sized CME gap above us, which we'll go through. But for right now, you're getting into areas where you have lots of liquidity, lots of long orders resting. So with that and liquidations below us, you want to see some type of bottom structure forming before you smash the green button. Otherwise, you're just gambling and trying to catch the knife. So looking over at the chart, where are we? Macro, this is the picture that people have been ignoring forever. VRVP, volume range visible profile. It's a great tool. It's free if you have like the higher versions of TradingView. Yeah, we're in a low volume dead zone. We're getting into an area of interest, but we've already cleared, 76k. This little hip right here. There's nothing that says we're not going to stop here. Nothing. I think if we don't have any continuation, if we have continuation and no stops, that should be the next target, 73.7, just because now we're getting into high time frame structure from this 8 month range that we were in last year. So even here, there's still no volume areas all the way down to the November open. I don't think on structure, the only place where I think we have hard stops to where we will not go lower will likely be somewhere around 67, 68. Just because This is where we have overlapping weekly, daily time frame support levels, and that's where I would expect us to go on like the worst case scenario. It's a high volume area, and this will act like support, so will 63. Because we've broken the highs, we've broken below stuff, that's where we have to start thinking of like that continuation. So we're still breaking down, we're still in the low volume area, and the hard reality is that we could actually stay in this low volume area between 82 and 81 all the way to 70K and even the high 60s. And we could stay in here for a while to farm out some liquidity quite aggressively, farm out some volume. So that's still the direction. To the upside, if we're going to start gaining levels, nothing matters until you get above that on a higher time frame. Nothing. There's just nothing really significant. Getting above the weekly open can open up a potential test going back into the high structure, or excuse me, the low structure that we just left. So getting back into this area. So gaining weekly, we potentially look to come back and retest 80K. Until we start regaining these levels and start breaking above this structure, there's no real chances of like macro reverses in the market. So you're still in a downside. You're still the market's dumping aggressively. A TradFi is dumping aggressively. So that's the direction of travel. This was the direction of travel for over a month. When we broke, bearish retested and made new lows. We came up, swing failed, made a new low. Swing failed again, made new lows. Now we're dumping and coming back into these levels. So the higher time frame has not changed. We are still in the direction down. The only local thing that matters is potentially getting above 78.2, but it's not bottom structure forming yet. What we're forming out now looks much more similar to what we saw, the summer of 21, when we were, it looked like it was aggressively going off a cliff, like parabolically down effectively. And that is the break that we're looking for. So I'm just snapshotting an area from way back in the day, but this is the price action that you want to see for some potential major reversals. You want to see a capitulation down move. We might be in this now. We're not certain yet. We'll know for certain on the buyback if we get strong buybacks that invalidate the downside very aggressively. And what you're seeing here, right, is you're seeing the price getting parabolically down and lower, coming back into this zone of kind of a sideways flat, and then it's actually losing the level really aggressively to coming down to making a higher low, and then a very strong buyback followed by some price action that starts sustaining above the previous levels. So what I mean by this is the only thing that really matters in this area as far as I'm concerned is this: price breaking down aggressively, right? You're going to come into a flat. We're potentially in the nuke now, but you want to see a higher low, and then you want to see price stabilize back above this previous level. This is the gain back that matters. This right here is the flip back that matters if you're trying to go back to the upside. So what that is a classic V bottom structure. We're not doing it yet. We're potentially in this move where we're going to the downside very aggressively and hard. We don't know if there's a bottom yet because that's still the direction of price. You will get some direction if you get some higher time frame regains. Now this is just on the 4-hour, right? If we go on the daily, it's a little bit even more clear. So here again, starting to parabolically go down, hit a flat, drop off a cliff, regain, and now we're establishing daily support back above that key level. So burn this pattern into your memory. That is the only thing that matters as far as getting out of what is a multi-day parabolic down move. We're not technically parabolic. You can argue that we are. Yeah, sure, fine. Doesn't really matter. I care about a V bottom recovery. Until that occurs on like the normal chart, we're just gonna have continuation down. So if I go a bit lower time frame here, and we'll look at some lower time frame structure. Let's go on the 4-hour. It's always one of the favorites, right? So yeah, we're losing all the levels and going lower. There's no evidence of any type of parabolic recovery. You're in the downside still. So for right now, you want some type of stabilization and sideways, and then maybe another leg down. There's no evidence that we're doing a V-bottom recovery of any of the structure yet. It's just in a complete and absolute panic at this point. This is what we were talking about Thursday, Friday last week with the VIX spiking. So even here, what matters? I would probably argue just adjust that a little bit, get back above that. That starts to look a little bit more attractive. You could say this, I mean 77.6, but I don't really like it because of the lows and where we are. To be safe, it's really closer to something like this. 78, 6, 78, getting back above the weekly open. And then we're only looking for retest back towards the levels that we've lost effectively. All of these things that we've lost that have led us to new lows. So that's the direction of travel. That's still the way that we're going to move as far as like the market direction. There's no evidence that we're doing anything else as far as that goes. Even on the volume side, it's still aggressive downside volume. We have lots and lots of stuff pushing us lower. There's no evidence that we're going to have a continuation. And we knew this was happening as of last night around 16 UTC, right? Like on Sunday afternoon, right? Aggressively losing, closing levels below, and losing the local volume of control with big volume stepping in to push price lower. So that's still the direction of travel. You're waiting for some type of regain of level, even on low time frames. Yeah, there's no evidence of anything. You need to get back aggressively above these levels that you've already lost locally. So I would say that until you get back above this, you're still in the perpetual downside. This 73.7 is still like the first test of like year-old structure, but it's doing exactly what we expect in these areas. It's coming into our nice support zones. It's double tapping into these areas. So we may get a bounce here, we may not. If we do get a bounce here locally, we want to see some moves back up to 77. Again, this is really low time frame. We're on the 1 hour, and we really want to see some more aggressive V bottom structure. So remember, this is the structure, the daily structure that you want to see. It's the same exact thing on the 4 hour. Nothing else really matters until you start forming out V bottom structure. And then what'll happen is you'll get the V bottom recovery and retail will flip trying to short it. Until those two things happen, you're in a downside. So don't catch the knife. You're looking to continue until proven otherwise. That's it. Catch you later.